Goldman Sachs Group Incorporated's profit plunged as the Wall Street giant notched one of its weakest quarters under Chief Executive Officer David Solomon. And the second quarter earnings fell 58% on an investment banking slump, real estate markdowns, and a goodwill write-down in the consumer business, which houses the Green Sky lending business. Return on equity, a key measure of profitability, slid to 4%, the worst among the top U.S. banks. The firm had been actively tamping down expectations heading into the report, prompting analysts to slash their estimates for quarterly profit by almost half since mid-June. Shares of the company fell 0.8% at 9:35 a.m. in New York. And they have Goldman. This management has been working to smooth the firm's sometimes volatile quarterly results, which featured big gains during the post-pandemic boom, followed by a run of missed profitability goals. Investors are looking to see whether the second quarter represents a trough for the New York-based company, with a steadier run of earnings gains ahead. They've come out and reveal all the problems, said Sandy Pomeroy, a money manager at Neuberger Berman Group. They need to come out and articulate some confidence that we are at the bottom from a cyclical perspective and that they've cleaned up all of their problems. And as the focus were rejected for a positivity, and she asked someone with the employment she had claimed, building on that question, where she really is, still of the mess. This is clearly a battleground stock for investors, she said, probably more so than any other peer in the financial services space. And equity trading revenue was one bright spot, coming in ahead of the firm's major rivals at $3 billion, compared with estimates for $2.47 billion. Goldman has now clinched the top rank in that business in 3 of the past 4 quarters. Notably, total trading revenue is down just 13%, a much smaller drop than the 25% decline Goldman President John Waldron had warned of in early June. The asset and wealth management business posted revenue of $3.05 billion, down 4% from a year earlier and below analysts' estimates for $3.5 billion. The unit was buffeted by the bank's exposure to the real estate sector, with write-downs both on its lending portfolio and its equity investments, contributing to a $1.15 billion pre-tax earnings hit tied to principal investments. And whether in his own billing or anything, allows money to what is the big way to find it. Right now, in 17, whenever that is, a similar time that ever told up, that is a massive, perfect device. Has been looking to rely more on fees from investing money for other institutions and cut back its own wagers. The bank also reported a jump in operating expenses due to how it accounts for impairments tied to some of its consolidated real estate investments, as well as the goodwill write-down. The impairments totaled about $1 billion. Goldman has been pursuing a sale of the Green Sky business just over a year after completing its purchase. One of the most visible signs of how dramatically management has backtracked on the pursuit of its retail banking strategy in the past year. It also got rid of substantially all of its Marcus loan portfolio, recognizing a roughly $100 billion gain from that. Another noticeable drag on earnings was the jump in taxes tied to non-U.S. earnings. That bumped up the firm's effective tax rate to 22.3% so far this year, from just 19% at the end of the March. Fixed income traders brought in $2.71 billion, down 26%. Expectations were for $2.81 billion. An investment banking revenue of $1.43 billion fell short of analysts' average estimate of $1.51 billion. Equity underwriting climbed from a year earlier, and advisory fees plunged. Bankers have cautioned, even when deal-making rebounds, the low volume of announced mergers so far this year could keep the pressure on through the rest of the year. Revenue dropped $8 to $10.9 billion compared to analyst estimates of $10.5 billion. And total assets under supervision increased to a record $2.71 trillion, up from $2.67 trillion as of March 31. So